Hello everyone, it's Kei and I'm a professional trader in Tokyo, Japan. From today, I'll be talking about money management in 3 consecutive videos. And on this video, I'll be especially talking about how to manage your Forex account so that you can be psychologically safe. When people usually start trading, they all excited and put all their money into the trading and eventually blow up their account. And not only that, they go bankrupt in their life also. I was like that too when I first started Forex. I bought some indicators and EAs and running trades, but eventually I blew up about $10,000. Well, including those technical tools, I lost like $20,000 in total in a month. And that's when I really felt this is not the way it should be. And when I lost all that money, I was damaged psychologically and could not be able to eat anything for a week. But after that experience, I realized I was doing things wrong, by looking back my trades and how I traded. And after that, my asset gradually increased a little bit, but that was really when I learned so much about the truth about Forex trading and money management. So from today, I will mainly talk about how you should manage your own money based on my experience so that you don't repeat the same mistakes I did, right? So if you like this topic already, please press a good button and let's get started right now. In fact, I got an email from one of my followers about money management, and let me share it with you. His name is Mr. Matt, and he's from Dubai. He says, "It's been 4 years since I started Forex, and now I'm making 100 pips a month." Oh, that's great. But earlier, I increased my position sizing. Then I found it's a big stress, and I got a loss of 100 pips in a day. And because of that nightmare, my performance got low in my own occupation also. I looked back and found I've been trading where it's not supposed to be entered. Now I really feel it's important to learn about money management. In fact, after losing 3 times by big lots, the total loss became 10% of my total fund, and I've got so stressed and felt so worried. How do you manage your fund? If possible, can you share your money management sheet or something so I can refer to it and manage my own account with that format? I searched on the internet, but I don't really find a good one. Well, thank you for your email, Mr. Matt. Appreciate your sharing. And what I think after reading his email is first, money management is very important because what money management in Forex means, it's like a survival strategy in a battlefield called Forex, the way to survive yourself. And when you think about keep surviving on the market, the first priority is to save your fund, because if you lose all your money, it's a game over. So you have to have 2 kinds of money: money to live and money to play. And Forex trading or any investment should be done by the second one, money to play. Do not touch on the money to live because when you lose, it will affect your living, and also it's harmful to your psychology. So like I said on my previous video, the money to invest should be something it's okay to be gone, because even if it's gone, you can still keep living, right? This is based on my own experience, and money management is very important to keep on playing with your own free money without touching your own living money. And therefore, you need a calculation of the risk reward and position sizing every time you trade, and look at your profit factor and R multiple that I also talked about on my previous video. If you haven't watched it, I will put the link on the description below because this is what I do every time I trade, and it actually leads to find the right entry spot, because everyone doesn't have infinite amount of money. Everyone has a limited money to be able to invest on the trading, and in that sense, money management is crucial. For example, When you have $1,000 in your trading account, and let's say each loss to be set $10 on each trade and $50 in a day, that means your risk is going to be 1% on each trade, and your risk of a day is going to be 5% of a day. $50 of $1,000 is 5%. So that means in theory, if you keep losing 20 days straight, you lose all that $1,000, right? But if you can prepare another $1,000 next month, then you can trade again with that money, and that means you have no risk to your living life. And this is just the worst case scenario, In reality, you will be winning sometimes and losing sometimes, and gradually the fund is going to be less. So when you think about surviving in the market, if you can manage the risk, your surviving chance will get better. And as you keep surviving in the market, your surviving skill will be improved gradually. Then at some point, you will be able to break even first and eventually be able to win overall. So Mr. Matt says he can get 100 pips in a month with his strategy, so he already has that trading skill. So the point is, he needs to manage his own money to be able to keep that performance. And this time, in his case, the problem is not actually about money management, but the real problem was that he increased the position sizing. Now, let me talk about the truth about winning rate. To be honest, winning rate is not so reliable in trading because it's got some deviations. So remember, it's something that's not reliable as always. For example, if you have like 70% winning rate throughout a month, someday it becomes 80% or even 90% winning rate in a day. But someday it could become only as low as 30%, right? So even if you have like 80% winning rate with your own strategy for a couple of days, the next day can be the day when your winning rate becomes dropped down to 30%. And on that day, you might be so unfortunate to increase the lot sizing and get big loss in that day, just because you had 80% winning rate for the past couple of days. It's like when you compare the car that's moving with 10 miles per hour and 100 miles per hour, the fear is so different, right? For example, let's say you usually trade with 0.1 lot. But as soon as you increase the size to 5 lot on the next trade, of course your performance will become low because you might take profit faster or you cut loss faster, or you cannot be able to close that position where it's supposed to close, especially when you are losing with that big lots. In other words, you cannot be able to do things that have been able to do as soon as you increase the lot sizing. So in Matt's case, I think it was not because of the money management, but it was because he increased the lot sizing. Remember, if you want to increase the lot sizing, don't just jump up, but do it gradually. Like if you trade with 0.1 lots and when you used to it, then increase it to 0.2 next, then 0.3 like that. Make sure to increase it gradually and get used to it psychologically. And money management is all about how to tighten the rope of your wallet. I guess this is a Japanese way of expressing it, but we say tighten the rope of the wallet means not to spend too much money. So speaking of money management, just focus on tighten your wallet, and whether you go high leverage or not, just make sure when to end trades. Depending on number of loss you have, decide to end the trading on that day. Because what's bad is you just keep trading without pausing and stopping to look back at trades, but instead you might keep trading as a revenge. Then of course your money will gradually become less. So like I said, first prepare to get a spare money. That's okay to be gone. Prepare for your trading money, then make sure to decide when to stop trading. So I think whether you're a full-time trader or a part-time trader, surviving in the market is the first priority. The longer you can survive on the market, the better the possibility it becomes to be able to keep on trading. When you think about the trading as one of the businesses what's important is to keep it surviving, right? Without going bankruptcy. And the worst thing is to do is to touch on the money to live, because by doing that, you cannot be able to trade eventually. What's more important than number is that the money for trading and the money for living should be different. You prepare two wallets, and on one side you put the money for living, and on the other wallet you put the money for trading. Because if you just use one wallet for living and trading without calculating things, eventually you will be touching on the money for living, and you cannot be able to trade eventually. It's like you're misplacing your priorities. So once you put your money into trading account, then think that money is for your company. This is also how I think when I withdraw money each month, but when you are a president of a company, let's say, how it's paid is usually by executive compensation or executive pay. So when you withdraw money from the broker into your bank account, think it's an executive pay. On an executive of the company gets paid the same amount of money every month, and it usually doesn't change every month. It should be fixed no matter how much profit the company makes in that month. So I want you to think the same like this, think that the company and you are different. Think Forex account and your personal account are different wallets. And I want you to regard this business called Forex trading without going bankruptcy. And once you have a mindset to start this as a business, of course you want a salary to be paid, right? Therefore, to ensure that pay, you need to run the business every day by managing the risk. Let me share how I manage my own account every month. In my account, I always have $100,000 equity, and it's fixed. Based on that money, I invest on trading and get return of 20% to 30% of net profit every month. So that means I earn somewhere between $20,000 to $30,000, or sometimes even more every month in average. Plus, I have other incomes from other sources, like I run a few websites, but they're just there. I mean, I don't put any time on those, but it gives me income every month. So I can live without trading actually. It's like I always have the break-even line placed right next to the position in real life living, because I actually keep trading without touching my living expenses. And that's one of the reasons I keep winning, because I feel psychologically safe that way and be able to trade objectively, like not subjectively like revenge trades, but trading objectively, without being up and down emotionally so much. Now, I'm not trying to show off how much I have or how much I earn every month, because I don't like to show off stuff without any messages, but what I want to tell you is the importance of having two wallets, like I said earlier, the wallet for your living and the wallet for your investing. And never touch on the money for living, because it can distract your focus on trading. On the next video, I will be talking about the pitfall of winning rate. Some people want to know the winning entry point and the winning rate of that strategy. And if they think it's 70% or 80% of winning rate, they think it's a great strategy. But there's a very important point to know about winning rate, because if you don't know this, you will be losing all your money. And also, I will be talking about 3 strategies when you have relatively small amount of money. There's a way to fight for those who have big amount of money, and there's also a way to fight when you have a small amount of money. So I'll be talking about 3 strategies when you have a small amount of money on the next video also. So if you don't want to miss the next one, make sure to subscribe and hit the bell so that you receive a notification so that you don't miss it, right? So see you next one. Stay gold. またね。